Let me show you one of the main mistakes that many traders, especially inexperienced retail type traders, make. And they don't look at the big picture. They're focused on the day-to-day action, and they make mistakes that an experienced trader would never make. So this is the gold chart. So the first thing I'm going to point out is that we have an 8-year cycle low right here in October of 22. So we are in the advancing phase of this 8-year cycle, and that means that we are making higher highs and higher lows, and that will continue until the 8-year cycle tops. And it's not going to top in 2 years. We're only just a little over 2 years into this. This is not going to top in 2 years. It's unlikely it's going to top in 4 years. So you've got at least, at bare minimum, you've got at least 2 more years for this pattern to continue. And you can see what I'm talking about. Here's the 8-year cycle low. Here's our next intermediate cycle low, held above this one. This low here, intermediate cycle low, held above this low. Higher intermediate highs. This high was above this one. This high pivot was above this one, and so on. And of course, this is where we broke out of that handle, and so now we are starting the. I would say we are in the very early, very beginning stages that will culminate in a final parabolic move into a bubble top sometime in the next 2 to 4 years. So we're just starting this process very early in the process that will eventually lead up to that parabolic move. And we are making higher lows and higher highs. So here's the mistake that an inexperienced trader, somebody that doesn't really know what they're doing, will make. They will, let's say they bought their, and this may be the case. Let's say you're buying your positions right in here right now, and let's just speculate and say that gold needs to come back down and break this pivot and make one more lower low before the intermediate decline is finished. So we would need a C wave. I am not at all convinced that we're going to get a C wave during this intermediate rally, and there's multiple reasons why that I've gone over in the premium reports. But let's just say, for the sake of argument, that we do, that gold needs to come back down, and it needs to, and it breaks this pivot, and that ends up being our final intermediate cycle low, not this one. And you bought in here. So this is what's going to happen to an inexperienced trader, the retail type trader that doesn't really understand markets, doesn't know what he's doing. He's going to panic and he's going to sell down here, and that is absolutely the wrong thing to do. There is absolutely no reason to sell down here and take a loss. Why? Because we are in the advancing phase of a new 8-year cycle. So once we get this bottom, whether it occurred here or here, then price is going to turn, it's going to go back up, and it's going to make a higher high. The next intermediate rally is it's going to go to 3,000. It may not go much above 3,000 because we didn't really, or we haven't yet anyway, we haven't really turned sentiment extremely bearish, but then we didn't turn sentiment very bearish right here either, or right here, and we got big moves off of both of those. But it's easier to get a big move if you get sentiment extremely bearish, and it didn't get terribly bearish at this bottom. So I'm gonna say if this turns out to be the final bottom of this intermediate cycle, and we don't come back down to retest this. And again, there are multiple things that make me question whether or not we will. So I'm going to say I'm like 60-40. I'm 60% that this is a final intermediate bottom and we're not going to get a C wave. 40% that we will get a C wave down over the next 2 or 3 weeks and break this pivot. But either way, doesn't matter. Once that's finished, we're going to 3,000. So does it make sense to panic sell your position on an undercut of this pivot when you know that we're putting in the bottom here, and that over the next several months, between, let's say, by March or April, gold's going to be 3,000. What was the point of selling your position down here, locking in a big loss when you had a winning trade that was ultimately going to go to 3,000 by spring? It's a terrible strategy. It's how inexperienced traders buy high and sell low. You are, if you bought anywhere in here, you're actually buying lower. You're buying lower than this top. It may not be the exact bottom. We actually bought the exact bottom for a short-term trade in GDX calls, and we made between 40, depending on what strike people bought, they made between 40 and 60% in less than a week on this initial rally. But now we're trying to get into a longer term position. We want to get positioned for that move to 3,000, and it doesn't really, it's not a big deal if we're early. If this comes back down and breaks below this, all you're going to lose is a little bit of time. You're not going to lose any money because we don't sell at intermediate bottoms. We sell at intermediate tops. We sold up here at the top. So we are never going to sell down here. That is the incorrect strategy. You never sell at an intermediate bottom because your emotions are telling you that price will never turn and go back up. That's always the sentiment. At this bottom, people, the trolls were, of course, telling me that gold would never turn and go back up, and then, of course, look what happened. Same thing at this bottom here. Gold's never going to go up. Gold's never going to go up. And now we're seeing it again here. The metals are crap. Bitcoin has taken all the liquidity out of gold, and so gold is never going to go higher. That's all nonsense. Capital flows back and forth. Right now, it happens to be flowing into Bitcoin, and gold is in an intermediate correction. Again, I don't know whether this was the final bottom or not. I'm leaning a little bit towards it being the final bottom, but at some point, fairly soon, because Bitcoin is 17 weeks into an intermediate rally, then Bitcoin is going to top, and it'll top when everybody is convinced that price can never go back down. It'll top, and it will have an intermediate correction, and then gold will start the advancing phase, the strong trending part of an advancing phase, and then of course, what you'll need to do is you will have needed to sell your Bitcoin when it was hardest to do so, and buy gold when it was hardest to pull the trigger. And then you ride that trend for a little bit, and it'll shift back and forth. That's just the way markets work. Capital flows from one asset to another. It flows from overvalued assets to undervalued assets. When price gets stretched too far above the mean, then you'll get a correction. That's exactly what happened right here. At this top, everybody was convinced that gold could not go down. And I tried to warn people, and I called the top here. Price was stretched a little too far above the 200-day moving average. We needed one of two things that needed to happen. We needed either a corrective move back down, or we need to go sideways for several months. And this one appears to be of the corrective variety, and it certainly did correct down to here. Now we're just trying to determine whether or not that was the final bottom. But it doesn't make any difference whether it was or not. If gold has to come back down and break below that, it's irrelevant. By March or April, gold's going to be $3,000. So if you know price is going to be $3,000 by April or March, then why in the world would you sell down here at an intermediate bottom? Makes no sense at all. The only reason anybody would do that is because they're unable to control their emotions. And they've got, heavy recency bias. Because price is going down, they assume that it can only continue to go down. So, the same sentiment that we saw here. Price can only continue to go down. It can never go back up. Voila, look what happened. Back up. Same thing's going to happen here. If we come back down and we break this pivot and we make a lower low, everybody's going to be, you're going to see all the trolls on X telling me that gold is dead, that price can never go back up. And then by March or April, I will be proven right again and gold will be back up at $3,000. And so, anybody that bought here, if, maybe you bought a little early, doesn't change the fact that it's a bull market and the bull is going to make higher highs. So if you bought a little early, still going to make good money. I mean, hell, you could have bought here. That would have been insanely early. You could have bought here and you would have had to weather months of pain and frustration. But ultimately, it's a bull market. And if you held on, you made insane amounts of money. Just to here. And again, we've probably got at least 2 more years, probably 4 more years for this to go. So 3,000 is just a very small stepping stone in this, what I think is the very early, very initial stage that will take us to the final bull market top, which I'm pretty sure will turn into some kind of parabolic move and take gold to, at this point, I think 10,000 is probably going to be a piece of cake. But it's going to take 2 to 4 years to get there, and we will have these corrective moves along the way, and inexperienced novice traders will continue to make these same mistakes at every one of these. If they're a little early on an intermediate decline, they will panic sell at bottoms and then be shell shocked and not be able to pull the trigger, and then price will, they'll buy up here when their emotions give them the all clear. And then when I'm trying to call a top, they will argue with me that the price can never go down because they bought high and they don't want price to go down because, then they'll take a loss. But, I can tell you with 100% certainty, well, let's say 99.9% certainty, because who knows, maybe the world can end and I could be wrong. But the bull market is not over. You could buy at this pivot right here, and ultimately you're probably going to make 2 to 3 times your money, because over the next 4 years I think gold is going to at least 10,000. So you could have bought the absolute top here, and yes, you would have had to weather some pain and some drawdown and some frustration for a couple of months. But it's not going to change the fact that this is a bull market, and bull markets make higher highs. And so once the correction's over, then we're going back up. We're going to go above this. Our next rally is going to take us to 3,000, unless we can clear sentiment a little more. If we can clear sentiment a little more, then we might go above 3,000. But we're at least going to 3,000 by March or April. And I think miners and silver will catch up during this process. So gold may only go to 3,000, may only add an extra $200 here, but I think the miners and silver are going to be huge during this rally. And I think 2025 is going to be the year of silver. And right now we're fighting with that $30 support zone. If silver can hold that, then it's going to break the manipulation, the cartel manipulation of the silver market. And $40 silver is going to be a piece of cake next year, and 45 is likely. $50 is a possibility. Maybe a bit much to reach $50 in 2025, but I think 40 and 45 are 40 is going to be a piece of cake. 45 is likely. 50 maybe in 2025. So 2025 is going to be the year of silver.